Elon Musk reportedly is shopping around for funding to take Tesla private, and there is no shortage of skeptics about Tesla. But as Bloomberg's editor-in-chief Emeritus Matt Winkler writes in a piece out this morning, the Tesla story is about more than just the rate of its burning through cash. According to Matt, this is the quote from the piece: Tesla is spending money at a rate considered unsustainable, but shareholders remain indifferent to this perceived peril because Tesla is creating increasingly more value the same way Amazon did more than a decade after reporting no earnings. Welcome now, Matt, back to the program. Great to have you. Terrific piece, Matt. So, drawing a comparison with Amazon, those are pretty bold words.
Well, it's the product that speaks for itself. And the product has gone actually from strength to strength. And you see that actually in the way investors perceive it, which is surprisingly, over the past 5 years, it's the least volatile, most lucrative stock. And that's because shareholders look at Tesla and say, it's so disruptive in the automobile market in terms of its growth. And also the outlook that electric vehicles are the future. We're all going to be driving them decades from now, and Tesla is way ahead of everybody else.
So you have a great chart in the piece that shows the market cap of Tesla versus the other car companies, and you can see it really outpacing it. However, can you qualify Tesla as a car company versus a tech company, and does that come with a different set of comparisons? Okay,
so if we go back to the first part of the century, there was one vehicle called a Roadster. Mm-hmm. There's a Model S, there's a Model X, and there's a Model 3. And the Model 3, according to our own Bloomberg New Energy Finance, is the most important electric vehicle company in the world in terms of purchases and market share. And the Model 3, according to Consumer Reports, is already disrupting the luxury compact entry market with its sales, which are likely to outpace everybody this year.
The performance to date is the performance to date. At the same time, a lot of the value is in what comes around the corner. And they haven't had much competition yet. And yet you have like the BMWs of this world who are really crashing in with many more models. Might that really slow down Tesla's rate of growth?
I think it might actually do the opposite. And that's because all of these other companies are not all in. Tesla's the only company that is completely in. So BMW is still committed to internal combustion engines. So is Porsche, so is Jaguar, so is GM for that matter. Tesla is the only company that says, this is all we do, this is all we're going to do. If you're a consumer and you're going to buy an electric vehicle, who are you going to buy it from? The company that's all in, or the company is, well, I'm not so sure.